Hi there, it's Craig Meatrel from Strategic Wealth. The end of the financial year is nearly upon us, so I thought I would do a quick video to cover off a quick question that I get at this time of the year, in fact, any time of the year, about how do I reduce my tax? So this video looks at how you might reduce your tax using a certain type of super contributions. So let's have a look at concessional contributions to super. So the first question is, what are they? So there's three types of concessional contributions. There's the superannuation guarantee, the 10% that's put in by your employer if you're employed. If you're employed, you can also choose to salary sacrifice some money into super. And thirdly, there are tax-deductible super contributions. These are contributions you make to super and that you claim a tax deduction for them. And this type of contribution is the primary focus of today, is because this is the one that you could make the most of just before the end of the financial year. Now, for most people, they have a limit on the total concessional contributions they can make in one financial year. In this financial year, it's 27,500. So the question is, how do tax-deductible super contributions reduce your tax? Well, the answer is your taxable income is directly reduced by the amount of the contribution. So if you earn $80,000 and you make a contribution of $10,000 and you claim a tax deduction for that, you'll be taxed on $70,000. Now, putting money into super doesn't go in there free. It does incur tax of 15%. You don't see that, but the super fund sends on the 15% to the ATO. For those people that earn a bit more, over 250,000, they can incur an extra 15% on their super contributions. Now, why this works, even though you've paid tax of 15% on that super contribution, the reason it works is that most people are paying tax at a much higher level in their own name. So, for example, people are over 45,000, they are starting to pay tax at 32.5% plus Medicare. So for them, putting money into super, they are getting about a 19.5% tax benefit by putting money into super compared to their own name. Now, while I did mention that there are a limit of 27,500 this financial year, it actually is possible for some people to contribute more than that and able to claim a tax deduction for it. These are called carry forward concessional contributions. So let me explain more about what carry forward concessional contributions are. These are contributions that are essentially make-up contributions. So if you've missed out on your cap the last few years, you're able to make up for them in this financial year. So let's look at the previous concessional contribution caps of the previous years. They were all $25,000 instead of the 27,500 we have now. And if you fell short on any of those years, that amount that you've fallen short in total, you're able to make up in part or in full this financial year. So for example, if you fell short 5,000 in each of those years, you got a total of 15, you could make an extra $15,000 in contributions this financial year. Now, important rule to note is the carry forward rule is only available if you have a total super balance of less than $500,000 at June 30 the previous year. So in this case, it's June 30, 2021. So the question is, why carry forward? Apart from the nice extra tax deduction, is that it's particularly useful where clients have maybe they've sold a big asset like a property and they've got a big capital gain. They'd like to offset some of the tax. They may have sold a business. They've sold some shares. They might have had expecting a big one-off bonus this financial year that they would like to contribute into super and make up for that. So that's typically the reason we use it. Now, sometimes it's hard to find out how much carry forward you have, depending if you had multiple super funds over the years. But the one source of truth is the ATO. They keep track of this. So you can log into the ATO via your myGov login. You go to super, then information, and then carry forward concessional contributions, and it will list how much is available for you to add to your concessional cap this financial year. Now, once you've made your contribution, the important thing is to tell the super fund that you intend to claim a tax deduction for it. Now, there's a form available on the ATO website, and that's called the Notice of Intent to Claim or Vary a Tax Deduction for Personal Super Contributions, and you send that off to your super fund. Big note of warning is that you should make sure your super fund has processed this form before you submit your tax return, or the tax deduction will be denied. So make sure you've submitted. They'll send back a notice that confirms that you're intending to claim a tax deduction, and then you're good to go and do your tax return. So that wraps up my summary of tax deductible concessional contributions and carry forward contributions. If this is something that you would like to combine into your financial strategy, please reach out and get in touch.